Hi, I'm Calvin Rose, and welcome to Market Minute. Please like, subscribe, and hit that notification icon so you'll never miss one of our upcoming market reviews. We'll be publishing these short videos about what we're seeing in the markets each week. And today we're going to focus on the declines in equity markets, cryptocurrencies, the rise in gold, and the wild ride in interest rates. Let's get started. First, let's take a look at what's been happening in the equity markets. What you're looking at here is a graph of some new metrics that we developed several weeks ago. We're finding these metrics are very powerful and in some cases give you a leading indicator of what's about to happen in the market. But let me explain what you're seeing here. So you're seeing a graph of the ETF SPY, which mimics the S&P 500, and the black line and the left axis, that's the price of SPY over the last 2 months. So this is just a 2-month window here. And then down below, you're looking at selling pressure, which is the orange line, and the gray line is buying pressure. And you'll see when the gray line is above the orange line, which didn't happen very much recently because we've been in a downtrend, that's potentially a time to be buying. But when the orange line is above the gray line, like here, it's a good time to either be out of the market or be short. So what are we seeing now in these indicators? Well, let's look at what I call a sum of a chart. So we've got a 5-day chart here, we've got a 10-day chart, a 20-day chart, and then a sum of all of those days. I find the 20-day chart to be a pretty good read of what's happening here. But if you'll notice over the last 2 months, this long dashed line is the 2-month trend of the selling pressure, the orange line here. And you see that the trend has been trending down over the last 2 months, while the buying pressure trend has been increasing as the price has been going down. So this is an interesting thing that's been happening. Now, if you look at the shorter trends over the last month, the buying pressure has been declining and selling pressure has been increasing. So it's not time to jump right back into the markets just yet, based on what we're seeing here. Let's also look at the NASDAQ 100, the QQQ, same charts here. If we look at the 5-day, you can see that the orange line is well above the gray line, not time to jump back in yet. 10-day, same thing. 20-day, same thing. And then the sum of the charts, same thing. So what we're seeing here is it's too early to get back in. What about gold? What are we seeing in gold? Because gold has been rising lately with all the disruption in the world. A lot of people have been using gold as a safe haven. So here's the same chart of gold, and you can see that the gray line has been above the orange line for quite some time here. All of this, right? And the orange line is clearly below the gray line. So the selling pressure has been declining. The buying pressure has been increasing here. But what you can see is, and you see a very strong 2-month trend for buying pressure, a very strong declining trend for selling pressure over the last 2 months. But over the last month, they've both flattened out, which could be indicating that gold has sort of kind of reached where it's going to go right now. Don't know. We'll have to wait and see. But that's kind of what I'm seeing here. Let's take a look at the 20-day chart. Yeah, you can see that's clearly increasing. The 10-day chart, the buying pressure is actually decreasing here. And the 5-day chart, the buying pressure is also decreasing. So kind of a mixed set of signals here in gold. Very strong up move, but it looks like it could be starting to wane a little bit. Now let's take a look at interest rates. And to do this, I'm looking at the ETF TLT, which is 20-year government treasuries. So basically long bonds I like to use these because they're more volatile. They move a lot more when the market moves, so you get a better read from them. But you can see here that the gray line, the buying pressure, was well above the orange line here. We had a small rally here as the conflict in Ukraine kept going on, and the orange line was well below, but they crossed today. This doesn't bode well for long bonds. It means that the yields are going to go up and the prices are likely going to fall. Finally, let's take a look at what's been happening in cryptocurrencies. Now, that's a little bit more difficult to take a look at. It's easy to look at Bitcoin, it's easy to look at Ethereum, it's easy to look at Solana and so on, one by one. So what I've done here is I created my own little crypto index, basically an equal weighted index. It's got 11 cryptocurrencies in it. It has Bitcoin, Ethereum, Solana, Cardano, Decentraland, MANA, and W Luna, and I might be missing another one. But anyway, there's about 11 of them in here. And this is an interesting picture because what you see here is that the selling pressure has continued to increase over the last 2 months. And in fact, in the last month, the selling pressure has increased even more. You can see that the gray line, the buying pressure, crossed briefly here for 1 day and then took off the other way. So cryptocurrencies look like they're not quite ready for long positions yet. Let's quickly recap what we've discussed. First of all, for equities, based on all of the metrics that we look at, we're clearly still at very high risk. Now, this could change next week sometime, but right now it doesn't look like it's going to happen very soon. So let's see how this plays out. Next, we have gold risk. And as you saw in the charts that I showed you, the buying pressure has been either flattening or declining in some cases. So we'll have to see how this plays out. That doesn't look good initially, but it's too soon to tell how this is going to go. We'll have to watch this next week and see how it plays out. So we have this one at low risk, not very low risk, because of the declining buying pressures that we see in the markets. Then we have interest rate risk. So what does that mean? If yields go up, if they go higher, then the bonds fall in price. And right now the risk is somewhere between high and very high there. So we're going to peg it at high for now. Again, these things can change by the middle of next week or so, but let's see how this plays out. We'll do this again next Friday, so hold me accountable, would you? And then finally, cryptocurrency risk this week. It's very high. Cryptocurrencies have not been acting well. They have their moments and then they back off. And right now, the metrics that we look at say that cryptocurrencies are at high risk. If you enjoyed this edition of Market Minute, please hit the like, subscribe, and notification icons so you won't miss another episode when we talk about what's happening in the market and how it might affect your portfolio. I'm Calvin Rose, and thank you for watching. That's all for now.